Hey, good afternoon, everyone. You are tuned in to US Home Talk. We are live every Wednesday at noon Central Standard Time. We talk about current events in the real estate market. So we talk about real estate, we talk about mortgages, we cover some credit stuff. We field questions, so kind of anything and everything goes. You need some parenting advice. You got 3 dads on this show that have a whole swack of kids between them, and our advice might not be the greatest, but we certainly have advice to give.
It's advice nonetheless.
Nonetheless, you still get advice. Maybe you might not want to take it, but hey, it's there. With me today is Marcus Walgrave, no stranger to the show. Obviously, he's with the South Dakota Home Team and Hague Realtors out there in Sioux Falls, South Dakota. Jason Walgrave is normally with us. He's working on his tan today. Is that what I hear?
He's trying to get a bronze.
He's bronzing. He's in the booth. I think he's in Mexico. Yeah. I think he's in Mexico, actually. I think he's on a vacation down there in Mexico working on his tan. So we're going to do the show without him today. We try to make this an interactive show. So if you have questions during the show, definitely feel free to reach out to us. A couple of different ways you can reach us. You can call or text our real estate hotline, 612-234-7585. So again, 612-234-7585. You can get a hold of us that way. Most people actually watch us live on Facebook. And so then you just go to the Facebook feed in the comment section there and you can type in your questions there. That's how most people interact with us during the show to get their questions answered. Topic for today. I should say here, if you want to get a hold of us at any time during the week, ushometalk.com is the best way to get a hold of us. So if you want to, it's your first time catching the show and you're going to be like, who are these guys? Like, what are they all about? Right? Go to ushometalk.com. You can find us on there. You can do some digging on there. Troll us on Facebook. Marcus, you still got your MySpace account active?
No, I the old computer just struggled to upload those MySpace accounts. So I think I maybe tried to start one, left it a couple days later. I'm trying to remember some of the messaging, MSN messaging, something like that. I can't remember.
What was the music download stuff we used to do back in the day? What were Napster? Was Napster one of them?
Napster. Yes. Napster was the one. Yeah, I think they're the ones who ultimately end up getting in trouble or whatever. Yeah. But that thing was sweet, right?
I mean,
holy buckets. Prior to that, it was you had to do like the you'd buy the CDs. You get the subscription. You buy like 12, and then you just got to cancel it real quick, and then come up with like a new name. And try to get 12 because like buy one get 11 free or something like that.
Yep.
So that was like the old hack back in the day. But then Napster came around and then it was just yes. I never did it. Never downloaded it.
No, absolutely not. No. So and even before that, I always had to get the old radio out that had the double-sided cassette players in it.
Yeah.
And then you'd have to listen to the radio and wait for your song to come on the radio. And then you'd have to record it off the radio on the old cassettes there. That was the original Napster.
Yep, that was the original. But that was allowed. That was allowed. There's nothing. Yeah, we did that with the TV shows, with the VHS.
Yep. I mean, but that was before and all that stuff. Obviously, things are changed. These kids got it so easy. They never had to do any of that stuff back in the day. They listen to their favorite music. Now they just get it whenever they want.
I'm an old millennial, so I still know some of this that we're talking about. But the young millennials, I mean, just within that same demographical group, I mean, that they've never even heard a lot of this stuff. There was about 10 years ago, I was working over at Avera Sports Institute in Sioux Falls prior to becoming a realtor in the start of 2014. And there were some young kids, middle schoolers, that were getting ready for the track season. And I made the comment about, I kind of feel like I'm getting old, right? And somebody's like, "Oh, you're not old." And I turned over to my right to a little middle school girl, and I said, "Hey, have you ever heard of Britney Spears?" She looks at me, she's like, "Britney Spears?" And I'm like, old.
Right.
so it was very clear.
Yes.
It was very clear.
Prove my point.
Yep.
I am old and proud of it.
I am old. Yeah. Thank God.
Right. All right. What are we going to talk about today? We're going to talk about some mortgage stuff here. We got a kind of a smorgasbord of mortgage stuff. And why are we talking about mortgage stuff? Well, A, I get to host the show today, and I'm the mortgage guy, so obviously I'm going to pick mortgage topic.
Yeah, fair enough.
B, the feds are meeting today, so there's going to be news all over, right? All over on the Google and the Yahoo and TV and all this stuff because of the Fed meeting and what they announced and what they're going to do with interest rates. So that is today. So that's another reason why we're talking about it. And we got another little checklist here of stuff that we're going to talk about too. But let's just start with the Fed meeting, right? Fed meeting is today, yesterday and today. The meeting minutes actually come out today. So they're going to decide what are they going to do with interest rates. Now, we got to explain what interest rates the Fed actually has control over. They do not have control over first mortgage rates. They don't have control over that, right? They have control over short-term rates. The Fed's funds rate is what it is. So if you hear the term prime rate, that's what they have control over, okay? So anything that is like tied to that prime rate, home equity lines of credit is one thing, right? Auto loans a lot of times is tied to that. Fixed rate second mortgage products, things like that, right? Typically shorter term, more consumer, I call it consumer type of debt, credit card interest rates, things like that. That's tied to what the feds are going to talk about today. So if they come out and say, look, we're going to lower interest rates by a quarter, then your credit card rates probably just went down by a quarter. Your home equity lines of credit rates just went down by a quarter. Auto loans just went down by a quarter, things like that. Mortgage rates, they do not directly impact mortgage rates. And mortgage rates, to be honest with you, if they are going to lower the Fed's funds rate today, mortgage rates typically get a little bit worse in the short term. They actually go up a little bit because of it. So,
and when you mean by go up a little bit in short term, kind of the remaining of the week, maybe a little bit into next week. Is that fair to say?
Yeah.
In terms of how we describe short term?
Right. Yep, exactly. And then it's just regular market factors after that affects rates. But, typically interest rates are affected by what's happening, in the economy today. What's the economic news today? Today, the big news is the Fed's rate. What are the Feds going to do with rates? And so it's expected that they're going to hold them flat. They're not expected to raise them. They're not expected to lower them. They're expected to hold flat. I think that's going to hold true. I don't think our mortgage market is going to swing a whole lot because the Feds kind of play their cards. You know what I mean? The last meeting, they basically said, look, based on what we're seeing, we're probably going to hold rates flat. So that's what everyone expected today. And if that's exactly what happens, there's not going to be a whole lot of turmoil. There's not going to be a whole lot of news, I guess, to talk about when it comes to mortgage rates.
It's already baked in.
Yep.
From what their forecast was earlier.
Exactly. Yep. So just know that could rates swing a little bit today. I mean, they could. I don't think they are going to swing very much. Probably not at all. If what we expect holds true. What else can affect mortgage rates though? Right. So Trump. Right. What does Trump want? Right. Because the Feds are going to look at economic data and they're going to say, could we lower rates by a quarter? Do we need to hold them still? Do we need to raise them a quarter? What do we need to do to basically hold inflation and keep inflation, at the level where it's at right now? Because inflation is actually at a pretty good level. They just need to make sure they hold it there and it doesn't, go back the other way. So that's what they're going to look at. Trump looks at things, can look at things a little bit differently. He wants rates to get cut. He does want the Fed to cut rates. The biggest concern is there if you cut them too fast, inflation comes back and then we're back into a mess. And then we see rates at 8.5% on a 30-year fixed. And no one likes that. But he wants rates to get cut. He's got higher tariffs, that he's been talking about. So if you cut down interest rates, and basically that interest rate is basically what people can borrow money from the government from, or at a rate, right? So it's like, okay, if I'm going to borrow money, if a bank wants to borrow money from the government, that's prime rate. That's what the Feds are setting. If you cut that rate, that's lower, the government's making less money. Trump's going to say, well, my higher tariffs is going to bring that money back in. That's why Feds, you can lower rates, because I'm going to bring additional money into our country from the tariffs to help offset that. And so I think it's a good thing that Trump does want interest rates to get cut. I think that helps out a lot of things here. But like anything else, you got to have a plan, right? If you're going to take from one side, what are you going to do on the other side, right? He's got a plan for that. Immigration reform is another thing too that's coming out that he's talking about. I don't know if that's going to impact mortgage rates or not directly. But that's just another thing that kind of has gone into the news recently that's kind of being tied into this mortgage stuff.
Yeah, right. When we kind of talk about the mortgages and rates is obviously the hot topic, but also just in terms of like the total amount that somebody is borrowing. So I think when we talk about the immigration reform, I think that starts falling into like the labor force and how that might affect the cost of new construction, things of that nature. So, but if we kind of hold on to the rates, it's been interesting, right? I mean, at the start of January, if I remember correctly, and Mike, please correct me if I'm wrong, but it kind of felt like end of December, beginning of January, rates were definitely over 6.5, 6 and 3/4. They kind of started to tick up a little, right? I remember reading a couple articles about the average 30-year mortgage by that end of that second week in January was slightly above 7%. We hadn't seen that. We had to go back to about May. Until we were over, or I think that's what I read. It was we had to go back pretty far to where we were over that 7%. Otherwise, we've been pretty much under it. That 6.25, 6.5 for the better part of the second half of 2024, and then before Trump was sworn into office on the 20th, he was talking about the tariffs. So that kind of had people a little concerned. And then it seemed like the rates were 6.25, 6 and 5/8, 6 and 3/4, 6 and 7/8, and then 7, a little over 7. But then once he got in, he's like, well, I'm going to hold off on tariffs until, from what I'm reading, about February 1st to maybe start implementing the tariffs on Canada and Mexico. And just that one, hey, I'm going to hold off for 10 days. Then it seemed like the rates came back down, and they're, what are they, 6.75, 6.5 maybe on certain days.
Yeah. So it's kind of a liquidity play. The more liquidity that goes into the mortgage-backed securities market, the lower interest rates go, and so you talk about, the fear with tariffs. If you raise them, what does that do to our GDP and things like that coming in, from other countries, goods and this and that. It all comes into a factor. And it's funny of how much mortgage rates, how much goes into mortgage rates based on what we think is going to happen versus the actual data of what has happened and what is happening, right? A lot of mortgage rates is based on, I think that's going to happen 10 days from now, or I think that's going to happen 2 or 3, 4 weeks from now. So therefore, I'm going to adjust rates today because I think that's going to happen. That's a lot, right? Whereas real estate data, it's like, what did it sold for? What did it close for? You run your comps, it's like, that's closed data. That's closed data. That's hard. It's not what we think is going to happen. It's what we can prove actually happened. And that's, it's more data driven like that versus I got this feeling, so this is what I'm going to do.
Yeah.
It's just weird of like how much that perception of what's going to happen down the road actually affects interest rates today.
Yeah, you guys are definitely. We kind of been talking about this for years now, right? I mean, pre-COVID, it was if a rate changed 0.25% plus over a month, it was like, whoa, man, that moved fast, But then once kind of the COVID years rolled in, it was just like a quarter rate move in a week was like the norm. And it seems like everybody has kind of embraced that now, right? But you're right. I mean, in the real estate world, Mike, I mean, in my market, I know I can confidently say, yes, home prices are going to increase in the Sioux Falls, South Dakota area. Simply because of demand, population increase. There's a lot of investment in the commercial sector. Usually when you see that, residential has to, mirror that. If businesses are being built, well, people got to work at the businesses. So, people come here for the jobs. And so, I mean, I can sit back and say, hey, I mean, and not only that, but when we start seeing, okay, well, people want to come here and we have low inventory, our builders are going to build. And if our builders are going to be building and they may looking at it and say, hey, labor's probably going to go up a little bit this year, possibly because of the immigration reform and possibly because of some tariffs on lumber up in Canada, things of that nature. Well, if new construction construction is more expensive in 2025 than it was in 2024. I'm very confident that homes are going to continue to sell because of the demand of our area. Well, pre-existing homes, they're going to be riding that wave as well. They're going to increase in value as well. So, it's something where a lot easier for me to make a forecast of saying, hey, the Sioux Falls area is going to see appreciation, 3.5%, maybe 4% throughout the year, than it is for somebody like yourself who says, yep, I'm going to give you that 6.25 by the middle of February. It's like, who knows, if somebody makes a comment or like that, and it can really adjust the markets quickly.
Right. Yeah. So just a couple other notes I had here too. So equity in homes is at an all-time high, right? But credit card debt is also at an all-time high, right? So equity, which is, basically like savings in your house, is at an all-time high, but then you also have all-time high for debt hanging out there. Kind of seems a little, counterintuitive, if you will. It's like, if you have equity, why would you have all this debt out there? You know what I mean? But this brings me to my point of how second mortgages are booming, right? So in the last 12 to 18 months, second mortgages are like the new refinance wave, right? So people are in debt. They're in debt more now than they ever have been before. They have equity in their houses, so they got to tap into that equity to pay off some of that debt. Well, if I refinance during the COVID years and I got a 3% 30-year fixed interest rate, I don't want to touch that loan. I don't want to give up that 3% for a 6.5% or a 7% of what we can get today. So what do? You add a second mortgage to your house, right? Well, second mortgage interest rates are always higher because they're in second lien position on your house, but that's where the Fed funds rate comes in. If the Feds come out and they lower rates, the rates on those second mortgages come down. Now it's a little bit more affordable to do that second mortgage, to do that cash out on your house, take that equity, pay off, some higher interest credit card debt or whatever, and kind of right your finances a little bit. So, in a previous show, go ahead.
I was just gonna say, write your finances, right? I mean, it's easier to sit down and say, hey, I got $50,000 of debt and credit card. I'm going to take out the second mortgage against the equity in my home, and it's going to be a 10-year or a 30-year mortgage, right? Kind of in a fixed rate. You can in a sense plan 30. For that. Yeah. So it's like, you're in that position. Say, hey, I'm going to pay off this $50,000 debt that I built up over the last 18 months because the cost of living, got so expensive, groceries, et cetera, whatever it might be. And I'm going to put myself on a 10, 20, 30-year plan to get this paid off. That's manageable. That's manageable. And then knowing that your rate's fixed, it's something that you can kind of plan. You can plan easier planning to take out to get rid of that debt. Excuse me.
Right. Yeah. So that kind of just ties into the Fed's funds rate and stuff like I was saying. If that can come down, those interest rate comes down, that becomes more affordable. Trump wants the Feds to cut rates. It's like all these arrows are pointing towards, hey, let's lower rates. We want to get lower rates. I think it's on the horizon. I don't think it's going to drop out of the bottom anytime soon, but I see, looking forward through this year, I do see just that slow trickle down of interest rates. I don't think they go back up. I don't think we see 8s or 8.5s like we did back in October of 2023. I think they stay where they're at, or they kind of just slowly drift down, maybe touch, the high 5s, a couple times this year, which would be nice.
Yeah, I mean, I definitely think it's interesting, right? Inflation is just that. Everybody talks about how sticky it is, right? I mean, when inflation first started getting talked about, it was this idea that the Federal Reserve can wave their wand and fix it quickly. But historically, you look at it, and anytime when you see inflation like we did, and try to compare it to our last event that we had, it's not something that just goes away in 6 months or 9 months or 12 months. Right. And so, I think in my opinion, the Federal Reserve is, they know that, obviously they know that, and they're going to, be selective on how they speak to the public in situations like that. It wouldn't surprise me, because right now, what are they forecasting? 2 rate cuts in 2025? That's kind of
probably two quarter point rate cuts for a total of half. Is that what they're saying? I think roughly. right?
Yep. Yeah. 2 quarter points. Yep. Good point. Because I mean, that doesn't necessarily mean that they need to do a quarter. But that's, yeah, kind of seems to be what they're forecasting. But if you see like the spring real estate market is just booming and there's tons of activity. Well, what do you do when you buy a new house, Mike? A lot of people go and fill that house with some consumer goods, or maybe they go in and upgrade, furniture, appliances, things of that nature. So there's a lot of spending, that can be involved outside of the actual transaction of real estate. So for me, it wouldn't surprise me. We're here. What's their big event? They got a big event coming up in February or March? The Federal Reserve.
They'll have another meeting. Their next meeting, I think, is going to be March something. It's going to be probably middle March, early March.
Yeah, middle to the, yep. I mean, it wouldn't surprise me if, like, depending how these tariffs play out, if the tariffs that do get put into place, that they might do a rate cut then. But if things are showing well and the economy is doing well, and it wouldn't surprise me if they hold off on it and they don't do a cut. So if that were the case, if they forecasting a rate cut and they don't do a rate cut, then it kind of shows some signs of like, hey, what's going on? Then that might be that opportunity to see those mortgage rates drop.
Right. Yeah. That's the thing. It's like there's so much on the mortgage side of things that we think this is going to happen, so this is what we're going to do. And then if that doesn't happen, you kind of unwind what you just did. You know what I mean? It's like, well, why wouldn't you wait and just see what they actually do before you do that? But it's not how the world works, right? Everyone tries to forecast, makes moves based on that forecast, and then, if their forecast is right, well, then they made the right move 2 to 3 weeks ahead of time. If it was wrong, then they got to unwind the move that they just did. It's just so weird how that works, but it's kind of the way it's always been.
And a very open-ended comment. We're going to do 2 rate cuts this year, but I mean they could do it any month from until the end of the year. So it's like if they were to save those 2 cuts until the very end of the year, it's like, well, we kept on our word and we still did what we said we were going to do. But I think a lot of people are kind of anticipating one to happen a little bit sooner than later, especially if there's some of that pressure from the president to make that happen.
Yeah. Yep. It'll be interesting to see what unwinds here. But I mean, I think the good news for our industry on the real estate side of things and the mortgage side of things, I mean, Trump's narrative is that he wants rates cut. Right. He's come out and said that that's what he wants. He's going to be putting some pressure on the Fed to make that happen and to do that. And he's got some back end plans, to help, quote unquote, subsidize those types of cuts. So he's been here before. You know what I mean? He's seen this. He's got a clear vision, kind of, I think, of what he sees. He sees our country, being at, or where we're being at here in the next, 12 to 18 months. So.
And he signed the executive order, the emergency price relief. Not a lot of details in terms of like what exactly that means or how that's going to happen. But I mean, President Trump is understanding that there's a lot of costs that the average American is taking on right now for cost of living and other expenses, and so it'll be interesting to see how it all plays out here. Hopefully, we kind of get a clear picture here in the upcoming weeks and see what the plan is and see how we can kind of get everybody feeling more confident about the overall cost of living and move forward with the growth of our country.
Yep. And if you're actively buying a house right now, if you have a purchase agreement, you got a close date set up, you have not locked your interest rate yet, be in close contact with your loan officer today, because the Fed meeting minutes are going to come out here in just probably 20 to 30 minutes roughly. And there could be some market movement there, right? So just stay in touch there. I know I got about 6 or 7 people here that haven't locked yet that, might be a flurry of calls potentially this afternoon for me, depending on what happens there. But that's it for our show today. We appreciate everyone tuning in. Again, the best way to get a hold of us during the week is to go to ushometalk.com. That's how you connect directly with Marcus, myself, and Jason. You can catch any of our previous shows on any podcast service you have out there. So Spotify, Apple iTunes, any of those services, you'll be able to find us. US Home Talk is what it's called. Appreciate you guys listening today. We'll be back next week with some more content. have a great week, and we'll see you then.